Welcome to Awesome Spreadsheets. In this demo video, we're going to show you how to set up your company's chart of accounts. The first thing you want to do is head down to the navigation button and select chart of accounts. In order to create the individual accounts your company is going to need, first you must enter a unique account number, account description, tax number and account name reference. Select whether you want the account to be able to reconcile on the bank reconciling page. And for those of you who have a copy of Awesome Spreadsheets Pro, you would see these additional 3 columns. If you want the account to be added to your construction budget, you would select that here. If you want the accounts to show up on your master format report, you would select that here. And finally, if you want the account to show up on your real estate report, you would select that here. Your company may have the following asset accounts. We have cash on hand, your business checkings account, your business savings accounts. You have an account for tracking receivables. If your company has purchased a building, then you want to set up an account for tracking the cost of the land, the cost of the building, and the cost of depreciation over the years. As you can see, I have the first 3 accounts selected to be reconciled. And that is how you set up your company's assets. Next, I'm going to show you some examples of a company's liability accounts. Liabilities are typically what your company owes to other people. So in this example, we're going to create 4 liability accounts. We have our accounts payables. These are unpaid invoices that we owe to other people. We have a credit card. This would be money on the credit card that we have to pay off. Same thing with the line of credit. And in this case, we have a mortgage associated with the building that we purchase. And every month we have to make mortgage payments, and that's going to be tracked here on this account. And as you can see, for the credit card, I've enabled it to be reconciled so that every month I could reconcile the credit card to make sure my journal entries match my credit card statements. Next, we're going to show you how to set up your company's equity accounts. Here we have 2 equity accounts. First, we have retained earnings opening balance and retained earnings closing entries. At the beginning of every year, you want to enter all your assets and liabilities and equity from the previous year. So you would add that here into your retained earnings opening balance. And then at the end of every year or business year, you want to close out all your revenue and expense accounts. So that you will close that here, and the 2 of these create your retained earnings. Next, we're going to show you how to create your revenue accounts. Okay, here we have some examples of some revenue accounts that your company may have. If you are in the sales business, then you want to create this account here to track all your sales. If you provide a service or you're in the service-based business, then you want to create a service account to track the service revenue. If you're a landlord or a property manager and you're collecting revenue from rental properties, then you want to create these 2 accounts here, or 1 account per unit for the revenue collected from tenants. And this account here is a temporary account. During your bookkeeping process, if you have not created the right account or you're not sure which account to put the revenue to, then you could put it to the uncategorized revenue, and then later on you would create the appropriate account. Or when you're working with your accountant to file your taxes, then you want to clean up these uncategorized revenue accounts. Okay, next we have our cost of goods accounts, or our COGS. Examples of cost of good accounts could be your starting inventory at the beginning of your year, any new inventory that you purchased throughout the year, direct wages, subcontractors, and your ending inventory balances. Next, we're going to show you how to create your operating expenses. Here we have an example of the different types of operating expenses. So these expenses are costs to the business that the business has to pay on an ongoing basis to operate. For example, we have accounting fees, advertising and promotion, bank debt expenses, bank charges, general administrative expenses, interest on long-term debt, mortgages or short-term debt, such as credit cards, management fees, management salaries, professional fees, such as your lawyer fees. If you're renting a building or you own a building, you might have to pay real estate rental or property tax, repairs and maintenance, and so on. So these are some typical expenses that your company may require to pay to operate. So there you have it. This is how you would create a chart of accounts required for your business to capture all of its transactions during the bookkeeping process. Hope you enjoyed this video, and we'll see you on the next one.